promises to be a bit of a difficult morning for us, given the commentary that you heard from the Fed chair. He's talking about how inflation continues to be very stubborn. Time and again, he explicitly mentions that they will have a cautious approach from here on, and that is what has actually led to a slide of over 1,000 points when it comes to Dow. 10th day on the trot, that index has been on the back foot. Not just that, S&P took a beating of almost 3%, Nasdaq was down quite meaningfully, and even asset classes like gold, Bitcoin, they have also seen an impact coming in off the Fed commentary. What is the major takeaway? No, it's not the 25 basis point cut that they have delivered. The major takeaway is that next year it's going to be 2 rate cuts of 25 basis point each versus the expectation of 4 cuts which was penciled in earlier, and that exactly is the worrying point, Nikunj, that rates are going to stay higher for longer, or this rate cut is going to be a lot more shallower than anticipated.
You know, Anisha, you brilliantly put the factors at to play as to why the markets are down. Financial markets had become bloated. Bitcoin was above 1 lakh. Dow has seen not Dow, but Nasdaq had seen a linear rally. So markets were looking a reason to correct, and that reason, in a sense, seems to be the US Fed and expectations for a rate cut for 2025. But I look at things differently, Anisha, which is that how much really Fed has influenced the market move in 2024, and has Fed really been very accurate in what they have forecasted, both in terms of the rate cut, their view on inflation, and the US growth. With all due respect to US Fed, I think US Fed and even central bankers, Anisha, they've been wrong in the economic assessment. While what looks like a very hawkish kind of a turn, I think Fed is simply looking at the economy based on back data, and that back data is subject to change. At beginning of 2024, nobody thought that there could be scope for such a large rate cut. As we are rolling from 2024 to 25, everybody is now, in a sense, surprised that why rates will not come down in a hurry. So you cannot just assume that whatever Fed has indicated is just going to be tourism, because Fed has really lost a lot of credibility in the way how things and the opinions have moved and how the economy has moved after the COVID, looking at the money supply. Yes, today you're right, it will be a tough Thursday, we'll talk about it. But for me to assume that whatever Fed, this hawkish turn from Fed means the end of the road for financial assets and we are in for a bumpy 2025, just because instead of 3, there would be 2 rate cuts, and that would really have a very spiral down impact on the market. Hold your horses, guys. I mean, Fed's not been very accurate, and 3 becoming 2 is not the end of the world. So I expect that once this entire market volatility is behind us, market actually will find a bottom both locally and globally.
Yeah.
If you like this video, then like, share and subscribe to ET Now.